Hey guys, welcome to my channel. I'm Greg. I'm going to go over the cryptocurrency market and the markets in general, tell you what I think is going on. I come from a different point of view because I have been saying that the crypto market, Bitcoin and Ethereum and Binance, I include Binance there because I think Binance was the key to a lot of this. Those that weren't paying attention to Binance coin we're missing some vital information in my opinion. Though you might not like Binance coin, it is the third largest coin for those that don't like it. I know some people don't like it. I really don't like it either, guys. The exchange token, but the fact of the matter is it's doing well and has been doing well and is probably going to do really well into the future just because who's running it? CZ. He seems to be on top of things. So here's the deal. Inflation comes off its 40-year high, stays elevated at 8.5%. So inflation has come down a little bit, right? And this is trailing information that we're getting. It's 12 months behind. Okay. Said in my videos, inflation's probably peaked, what, 30, 45, maybe 60 days ago. I said, look, guys, it's probably peaked. Okay. And I was going to say, here's even Elon Musk agrees with me. I think he's watching my videos. That's a joke. I don't think he's watching my videos. Um, Says inflation has peaked. I agree with him on that, but we'll have a recession for 18 months. I don't think we're going to have the recession until 18 months or maybe 12 months. So 12 months to 18 months, then we'll have the recession. Okay. The reason why, if you go over to the inverted yield curve, guys, you see this is telling you this is an inverted yield curve. If you go back and look at the history of it, see 06, 07, when was the recession? Oh, wait, boom. You have to have a steepening yield curve and then it comes. So it could stay down here for a while. This inverted yield curve, this is the 10-year over the 2-year. This is when you hear inverted yield curve or steepening yield curve, or you hear 10 years, you might hear 10-year notes, 2-year notes, things like that in the media. This is what they're talking about, more or less, okay? So this is telling you the recession is coming, and then it's going to go up, and then that'll be the recession, okay? Now, why is that good? That's good because assets can still rock and roll. Risk on assets, when it's down here, they can still rock and roll. Go look over here from 06 to 07 and everything that was going on with some of the other assets back then. Just go look at it. They still went up quite a bit, and then they crashed when this started steepening, okay? I wanted to go over this too, and I told you, you don't want to pay attention to things in the media. I mean, you want to pay attention to things in the media, guys, in the media, but, right here, look at right here. Kathy Wood sold some Coinbase due to uncertainty on the SEC probe, right? So she sold some Coinbase, but her same company is showing a bullish outlook on Coinbase. Block, okay? That right there proves to you that, so if they say it's bullish here, now can you say this is true? You have to say, well, maybe that's BS. Which one of these is BS? Which one of these is not true? Because one of them can't, but they both can't be true. Have so you just read between the lines with this stuff, guys. It's just ridiculous. That's why Kathy Wood says we're in a recession. Don't agree with her. As a matter of fact, the move she's been making lately, I'm not really too sure if she knows what she's doing. I think she needs a little bit of advice, in my opinion. So, other bit of news here, DXY, guys. The DXY is down, dropping. So maybe this is the first wave back here on the DXY. 1, 2, 3, 4, 5, and it peaked. So once it breaks 1048, 1038. If it gets down there, it's good. So the DXY could be done with this correction. So I was wrong. There's not another, it might not be another push up. It could be done right there. So I'll admit I was wrong on that one. I want confirmation though. This needs to get down. Once we see the low 104s to 1037, then the DXY is done. This will be good for Bitcoin, risk on assets. Bitcoin, Ethereum up, risk on assets can go up, have less of a headwind with the DXY. So it might have been done right there, guys. So, and that's also important too. I'm going to go over gold briefly. A lot of people talking about gold. Is it done with this correction? I think gold is done with this correction. And if you're interested in it, I've been thinking about maybe buying a couple kilograms of gold, because it's going into a fifth wave right here. And I have a target of 2,700 to 3,000 on gold. So it's not, it's not going to be any crypto returns, and it's going to take it a lot longer, but you're looking at, 60+%, maybe 70, 80% on the gold move right here. And the reason I say that made a perfect flat right here. It made a perfect flat done. I posted it on Twitter. I said, I'm 85% sure gold's done with this correction, and now it's off to the races for gold for the next year or so. And that goes with the DXY. So I bounced the DXY off gold. Wasn't too sure if it was quite done here yet, but now that gold's here, boom, the DXY down. This is probably finished, more than likely. I'll go with it. That's finished. Not 100% yet. So, and then the oil, guys, the oil is going to be dropping, going over the boring charts again. The oil's continuing to trend down, you know. And why is this good? This is the inflation for the markets and the Fed was obvious because you can see it at the pump where people pump gas. You know, it went from $3 to $5, $6. Some places was even $7, and now it's being knocked out. And it's obvious. Inflation is going to continue to go on. They want to bring it down to 2% is not likely, guys. I mean, maybe 5% inflation. It's part of the system. If you look at it, see, this was the oil and the gas at the pump is just obvious. There's been inflation going on. Look at a cup of coffee, what it was just 20 years ago. Look at the price today. Look at the cost of car insurance 25 years ago. Look at it today. As a matter of fact, car insurance has gone up. I was in the car insurance industry. Car insurance was going up, I think, 10 to 20% per year. Per year, guys, 10 to 20% per year. It was one of the highest inflationary services out there. The only one that was higher, you want to know what the highest one was? College education. College education. You see, you know, everything's kind of cycles. So you have these sectors that will go higher, you know, they'll appreciate a lot more, and some other sectors won't. And when it's obvious, like gas prices at the pump, then you have the people, the general populace will, hey, start speaking up. And then the Fed has to come out and say, oh, we're going to do something about this. It's political maneuvering, more or less, is what's going on. Okay. But there's other things that are going up. The only thing that really goes down are like TVs, you know, TVs. Back in the 80s, you got this huge, gigantic TV with a tube TV. It weighed like 500 pounds and it cost like $3,000. You know, now you can get a TV for $80. So everything's like sectors, okay? Sectors when it comes to inflation. Just putting that out there. And 10-year treasuries is indication of 10-year treasuries is indication of the interest. And I'm still waiting to see if it's going to bounce off this trend and go up a little bit more. But it has bearish divergences. It could come down from this point too. Just waiting on this this guy right here for the market's gauge of interest rates. It's usually the 10-year notes, guys. You pay attention to those. So where does that leave us with Bitcoin? Where does that leave us with Bitcoin, guys? So like I said, Bitcoin is more than likely going to be doing something, whether it's in there or here, wherever that's going to be, and it's going to do that. I do believe that Bitcoin is in a corrective cycle. Some people are like, now why are there so many people still hanging around? Other people that are out there in the internet, in the YouTube saying, not everybody has left yet. The reason they haven't left yet, guys, is because the asset right here that you're looking at on the screen, Bitcoin, is in a fourth wave. They're not going to do it. You're not going to have that until Bitcoin finishes this, and then that'll happen over here, like it did over here. So people think this is the bear market. This is the fourth wave correction. It'll go up, and then this will be the bear market. That's where people, in my opinion, are getting confused with what's going on. They're going to call this a bear market until they see this go up, and it'll be over here. Okay. And if it goes over here, where likely is it going to go? It's going to go right back down to this fourth wave. So like I said in previous videos, if I haven't even done this yet. If I put something from, say, it gets to 100,000 and I drag this down now, how much of a correction is going to be? Probably somewhere between 80 and 90%. Let's take a look. You see? 83%. More than likely, in my opinion, that's what's going to happen. If you made it all the way to the end of my video, drop a like, hit the subscribe button. Peace.